All right, guys, hope you're having a great evening. Welcome back to Matt Money. Welcome back to another episode. Today, we're going to be talking about how the oil prices dropped effectively 100% since the beginning of the year. So, if you look specifically at where we entered the year at about 65 dollars or so per barrel for West Texas Intermediate. And actually, the last day, you can see the biggest number here is actually below a dollar. So, effectively, we started the day at about $18.27 for West Texas Intermediate, and we are now below a dollar, effectively removing about 95% or more from the current price of oil. So a little bit interesting, and effectively the price of oil is now basically free if you start factoring in transportation costs and things like that. Actually, a lot of places throughout the United States are effectively selling at a negative price. You can actually see now, just refreshing this, people are actually having to pay in order to get oil and sell their oil. They're actually paying people money at this current price. So actually, we've lost effectively over 100% at this point of the purchase price of crude oil. Reason being is a lot to do with storage capacity within the United States. We have about 2 billion to 2.5 billion barrels of storage capacity, a lot of which is strategic petroleum reserves for war times or anything like that, and the other 1.7 to 2 billion barrels of storage capacity is to be able to move oil and gas around for refining capability, as well as creating things that we utilize in every day, whether it's creating plastics or creating, I guess, just normal lubricant oils or fuel oils or distillate oils, for whatever sort of products you might need. That being said, now obviously there are a lot of places throughout the United States and Canada that trade at a discount from West Texas Intermediate. So in some places like Canada, I would say WCS, which is Western Canada Canadian Select, that is going to be trading at probably $10 below zero. So people are going to be having to pay $10 per barrel just to get it off and away from the property. I think this is going to be relatively short term, but could be continued to be exacerbated by the fact that the virus and the short term volatility in the market and short term demand of the products just continues to fall. Um, and I think the big reason why we're seeing this is this contract is ending either today or tomorrow, and I think a lot of folks have already reserved their storage space in that 2.5 to 3 billion barrels of storage capacity. And what might end up being happening now is you have these smaller players that might be trading only 50,000 barrels or 100,000 barrels, and they don't have the contracts negotiated with some of these storage facilities to be able to store their oil and gas. So now they literally have nowhere to put this crude oil, where normally they would have it a normal area to store that. What I mean is, basically, we have about 2 billion barrels, 2 to 2.5 billion barrels of storage capacity, and we're making about 12 million barrels of oil a day. And if we're only utilizing, say, 6, 7 million barrels of that, you're going to have to store that other remaining oil somewhere. Now, of course, this is a very big spreadsheet, and what we kind of have. I mean, you can kind of look at the moment. We're of that 2 to 2.5 billion. We're up about to 2 billion. So we don't have much additional space to kind of go by. And I don't necessarily know what the total is, but it's anywhere between 2 to 2.5 billion. And if you kind of look at what the September 2019 report says here, you can see we have about 600 million here with respect to just refineries. We have about a billion with respect to bulk terminals. You have another 600,000 or so associated with crude oil tanker farms, and then you have about 700 million, or sorry, 600 million, sorry, associated with crude oil tank farms, and then you have about another 700 million associated with the strategic petroleum reserve. So you have about 1.5 here, 1.6-ish billion, and then you have another 1.3-ish billion. So anywhere between 2 to 2.5, probably close to 3 billion barrels of capacity, of which strategic petroleum reserves are already almost tanked out. And of course, I'm sure this has gone closer up to 100% due to the cheapness of the oil over the past couple of weeks. So That being said, if we're not really utilizing the oil for normal demands, like having to refine it into petroleum products because people are driving less, of course, we're just going to try to store it. And I think that that is what is showing up here is this short-term shortage of storage capacity, and obviously, effectively, is just showing up as people having nowhere to put it. Now, when we start dwindling over into the June 2020 contracts, I'm hoping that some of these the fact that it's a new month and we basically might have the ability to move over into a different price and a different time frame, because now we're looking at about 6 weeks out compared to, I guess, this 2 weeks out. It'll hopefully soften up the anger on the price, or and lift the price, meaning, and hopefully we can start to see demand kind of come back. I'm not a futures trader, but this is my, I guess, rudimentary knowledge of what I know with oil trading, and so hopefully that gives you guys a little bit of insight. Obviously, we're in the second to last week of April, so obviously people are trying to figure out where their oil is going to be coming from in the May timeframe. So that's kind of what we're coming up with now. And once we kind of get to that point and close out April, obviously you have all your ideas as to what you're going to be doing for May, where you're going to be distilling, where you're going to be refining, what petroleum products you're going to be pushing out. And so then once you start getting into the late April, May timeframe, you're going to start trying to do things for June. So you can see already here in Brent crude, which is anywhere in like Europe and the Middle East, sometimes that is actually starting already, because on Tuesday, generally the second to last Tuesday of every month, is when they skip to the month ahead. So already trading for June 2020 in that time frame. So all right, I'm gonna wrap this up, and I'll catch you guys on the next one. Cheers.